Big retailers like Home Depot, Walmart, and Target all released earnings this week, missing expectations except for Walmart and raising concerns about a pullback in consumer spending. Here to discuss this and more is Brad Smith. Hey, let's get into it,
let us. Absolutely. All right, so if there was one way to kind of try to summarize this retail portion of the earnings season, I'm going to try and throw a little alliteration on it, if you may.
Okay.
And we're going to go with shifts. We're going to go with store traffic. I threw it off with the T there, but we're also going to talk about shrink here. So first, shifts. From necessities and discretionary, if you're breaking it down or looking across some of the U.S.'s major retailers there's been a shift in where those dollars are going. You think about the discretionary categories or the other categories that a company like Walmart, who no doubt has those grocery necessities,
right.
Those are week in, week out type of purchase, as well as tracking where the consumer elsewhere in the store is perhaps perusing a little bit more. And they're doing that more at Walmart than they are at Target. However, for both of them, it's still not great right now. They're still looking across the mix shifts right now and saying that consumers are being more discretionary, being more choosy about where those dollars are going in store. Right. So you might see a little bit more of that choosiness continue to permeate in future quarters as well. There's also the store traffic trend here. And if there's one thing that you think about, it's where consumers tend to purchase and how they tend to purchase when they are looking at or hearing about a recession for as long as we've been as long as we've been talking about it. And within that, the digital part of that starts to come into play because it comes back to how they're comparison shopping. And if they are comparison shopping more, a lot of that store traffic may diminish while they're doing more comparison shopping online. That leads to more digital opportunity for Touchpoint. But where does that go towards? And for a company like Amazon, for a company like Walmart that's invested heavily into their digital sales and their online traffic, their e-commerce grew by about 27%.
Walmart did well with e-commerce.
Right. And then lastly, on the alliteration attempt
I know you're trying to get all this out. Yes.
Shrink was one thing that continued to be talked about at Target.
Right.
That was an issue there. Walmart didn't say a ton on that. We spoke to the CFO of Walmart on this and just gave us a little bit of the inclination as to where shrink is impacting this, impacting the broader retail segment. And then largely, I'm going to throw a bonus S in here.
Okay,
you get a bonus S on the day, and it's shoes. We got Foot Locker's results on the day.
Those were bad.
And shares are looking absolutely terrible right now. The reaction here, the wrong foot, is what it seems like the retailer is getting off on this year. But it really does come with this lace-up strategy. You're going to see more of a really stringent look across the overall retail footprints that they do have and the amount of square footage that they have to operate to.
We're still on retail detail in the week ahead with Lowe's. We'll see if they did as poorly as Home Depot. Best Buy, et cetera. All right. Thank you, Brad.
Yes.